Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is March 7th. Today we're going to cover one out of the industrial sector, Union Pacific. And this will be the last video for the week, but don't forget to join us on Sunday for our portfolio update. And before we get in the video, for those of you who may be stopping by for the first time or who have just not done so, if you could hit that thumbs up button down below if you find any value in the content, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and hit that notification bell so you're notified whenever we put out any new content. And drop a comment down below. Let me know what you think of Union Pacific. Is it in your portfolio? Do you have any other industrial stocks or specifically railroad stocks in your portfolio, and what ones? Always love to hear from you. Let's get back to the video. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I am interested in investing. And just because it meets the criteria, 5 of 8 or 6 of 9 if it's a financial company, does not necessarily mean that I am investing. It typically will go into a watch list, and then I will do more of a deep dive into the financials of a company. And don't just blindly copy my investing criteria or my stock screener. Make sure that you are creating your own based on your timeline, your investing strategies, and what you are looking for as an investor. We all have different timelines. We all have different criteria that we should be setting for ourselves. I'm in my mid-40s, for example, closer to retirement than someone who was in their 20s or 30s, looking for more income than growth at this time. I am trying to protect my money and grow future income. Some of you might be looking for more appreciation versus dividend growth, or dividend growth versus current income, or relatively close to retirement. Now back to Union Pacific. If you want to know more about this company, check them out at www.up.com. That's www.up.com. That is their homepage where I pulled this information from. At Union Pacific Railroad, we are prepared to ship just about anything: food, forest products, automobiles, agricultural products, coal, and chemicals, safely and on time. No rail, no problem. Our shipping capabilities are not limited to our extensive system map. We will coordinate your shipment through our network, through other railroads, and over the road, providing complete door-to-door service. We offer our customers the most efficient, environmentally friendly transportation solutions available today. This is their map by rail. Hopefully, I don't know if that's coming through, if you can read that. Union Pacific Railroad, Union Pacific tracks. So this is their rails, right? Primarily. They do mention that they have over-the-road shipping as well, so they must own a fleet of trucks or work with other trucking companies to provide that service. But overall, this is their rails, how they're shipping it by rail. Now, the reason we are taking a look at them, down 8.82% on the day. Not a huge drop, but a drop nonetheless. Have not looked at this one. And in full disclosure, I am long this company, so I wanted to take a look at it anyway, just to get a quick update on where this one sat. Closed out the day at $248.93. We are talking about Union Pacific Corporation, ticker UNP, out of the industrial sector. 52-week range, as low as $183.69, as high as $258.66. So they are closer to their 52-week high than their 52-week low. Average volume of 2.4 million. Today's was 1.9. Market cap, $151.792 billion. A beta of 1.08, so just slightly more volatile than the overall market. Beta is the market, right? 1 being the market, or beta is volatility. 1 being the market. Anything under 1, less volatile. Anything over 1, more volatile. 1 being matching the market. Price to earnings, $23.84 per share. I always feel like Union Pacific has a high PE, especially for a company like this. EPS, earnings per share, sitting at $10.44 per share. Earnings date, coming up in April, sometime the 18th through the 22nd. For dividend, $5.20 per year. They are quarterly payers, so divide by 4, or we will see that here in a minute. Dividend yield, a little bit low on this one, starting at 2.07%. Ex-dividend date was February 28th. Looks like they're going to pay out March 29th. And 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $260.38. So they do see some upside as far as price appreciation on this one. Now, I like to get into the statistics, look at the dividend yield to see, or dividend yield theory, to see if this one is potentially undervalued. To do that, you go to their 5-year dividend yield average, 2.13%. Compare it to its current 2.07, what they call forward. Same number over here, 2.7. And since this is lower than their 5-year average. It actually speaks to overvaluation on this one. So this one would be slightly overvalued according to dividend yield theory. Now, payout ratio is low. I like under 75%. This is sitting at 49.76. So definitely meets the metric there. The only thing that I'm having a little bit of issue with is the price per share right now. Now we're going to get into the financials a little bit, look at free cash flow, and you should be looking at the financials more than just free cash flow, looking at the balance sheet, the income statement, debt to equity ratio, what are their assets over liabilities. You want more assets than liabilities. You want them to be paying down debt. You want growing revenue. You should be looking for growing margins, not decreasing margins or decreasing revenue. All good information in the balance sheet and the income statement. We're going to look at free cash flow because typically if you have free cash flow growing, you have growing dividends. So going back to 2021, they were at $6 billion in free cash flow. 2022, a little bit of a drop down to 5.7. 2023, bit more of a drop down to 4.7. Overall, I would say free cash flow actually looks like it's decreasing, which is not good. But they are aggressively repurchasing their own shares. 7.2 million here, 6.2. That one wouldn't really account for all of the drop. And this was a bigger drop, not only in free cash flow, but they're repurchasing their shares of 705,000 there. So I do like that they're still repurchasing shares. I want to see what they do in 2024. And I don't like that they have what appears to be decreasing free cash flow over time. Though their payout ratio at 49%, they have plenty of free cash flow to cover their dividends. It's just these companies are pretty capital intensive. They have repairs to their tracks. They have repairs to their railroad cars. They have a lot of capital intensive projects. If they want to increase any rail capacity, that all costs money. So that would come out of free cash flow. And I just don't like to see decrease in free cash flow for any company over time. It just gives me a little bit of concern, though their payout ratio does look fine, like I said. Now, stockanalysis.com is another source that I look at. You pick any sources that you want. Just make sure that you're not just blindly following one source, that you're looking at 2, if not 3 sources to make sure the information you're getting is accurate and up to date. They have 21 stock analysts that have taken a look at this. They call it a consensus buy. I'm actually in the hold camp right now, personally. They have a low estimate of $182. I'd love it back here under 190. That would be a 26.93% decrease from where it currently sits. They have an average estimate of $251.38. That would be a 0.93% increase. And if it happened to hit their high of $285, that would be a 14.43% increase from where it currently sits. All the while, you could collect that 2% dividend yield. Now, I like to get into the statistics here. They present a lot of the same information, or actually the same information that Yahoo Finance does, just in a little different manner. They also do this nice, forecasting chart with the analysts that have taken a look at this. So for this purposes, we're going to look at, under statistics, return on equity and return on invested capital. I like 10% or better for both of those metrics, and it tells you how well the company is reinvesting its capital back into itself. And the return on equity is smoking high, 46.9%, very, very high, much higher than the 10% I'm looking for. Return on invested capital, 14.48%, again, above the 10% I'm looking for. Very good numbers overall in this one, just don't like the price currently. That's the only thing, the only issue I see with this one. EPS growth, earnings per share growth, I like 5% or better estimated over the next 5 years. They're at 11.24%. Beat that metrics with revenue growth forecasted at 4.48%. So again, very good numbers overall, except for the price per share, at least in my opinion. But they do, of the 21 analysts, they do call it a buy. So I could be the one that's wrong. Now we're going to look at the dividend real quick. Again, low payout. I think it was in the low 40s from Yahoo Finance. This says 49.76. Either way, under 50%. I like 75% or less. So lots of room to increase that dividend, which is the problem. They are not increasing their dividend growth. I do not like that. Now, I will say, looking at their free cash flow decreasing, I would rather them pause the dividend and get their free cash flow growth under control than them to cut the dividend altogether. So maybe it is a good thing they've paused the dividend for now. Now and I am long, right? Here's my Union Pacific Corporation, ticker UMP, out of the industrial sector. This is my position. I own 38.9 shares. My cost basis is $196.69. I want it under my cost basis. So anything under $197 per share, I'm a buyer. I am up 26.5%, right? $2,032. I have $7,651.30 into the position. It's worth $9,683.38. Again, would love it to pull back here. Yes, I would lose this 20%, 26% gain, but I would add to my position and I would build this out a little bit further. Now back to the dividend payout. Again, going back to 2021, they were paying 97 cents. Raised it up in May of 2021 to $1.07. December 2021, so very aggressive in 2021 actually. Raised it up again December 17th to $1.18. In May 2022, they raised it up to $1.30, and that is where they paused it. So they have not had a dividend raise since May of 2022, right? I bought it back in this time frame in 2022 sometime. So they were increasing it up to the time that I bought it, and they just have not over the next couple years. Now this is one I will say, if they don't raise the dividend over the next year or so, it would probably go on the chopping block, and we would look to replace this position with a company with growing dividend. The yield is just too low at 2% to have it be frozen in time, in my opinion. I need some dividend growth on this one. I do like the capital appreciation. I would preferably take this gain in capital appreciation and roll this position into something else, this $9,600, put into another position with dividends that are growing. But I may give it up to another year to see if they get things under control. I understand that they have kind of paused this because the free cash flow looks like it's decreasing over time, and maybe they're trying to get their footings back underneath them. We'll see. Well, that is it for this one. Let me know what you think of Union Pacific down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, most importantly, subscribe to the channel. Join this journey to financial freedom. Join the vested interest community. And don't forget to hit that notification bell and drop a comment. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.